Good evening, eminent panelist of the panel discussion, which is about to follow. My friend from the media, ladies and gentlemen. At the outset, let me thank Tamal and Mint Management for inviting me to this annual banking conclave. I must say it has become a most eagerly awaited item on the banking calendar. Last year also I was a part of this panel discussion, of course from the other side of the spectrum. And I recall that the theme for last year was Indian banking, the new banking landscape. Half of the theme remains the same. It has become the new India, the new banking landscape. So I was just musing that the scope has enlarged from the Indian banking to new India. So the scope of the discussion has enlarged and time given to me has quite shrunk. I have been given 15 minutes to set the tone and give my keynote address. And it was a big dilemma. Because I thought that if you have to cover this kind of vast landscape in 15 minutes, it can be only done through a satellite mapping. There is no other way. So what I propose to do in next few minutes, I'll give an aerial view on the theme and then leave it for these mighty moguls to do a more ground level mapping. I think that will be. So we come to that. I thought then rather than delivering a very dry keynote address, I'll just put a few slides on PPT to set the context. So we come to that. Yeah. Now, if we pick up the theme, so new India. So let's first see what is new about India and few questions. Is it new political regime and consequential policy changes? You can read it all, you know. These are the few things which is being spoken in the context of New India. As usual, the technology, financial inclusion, and so many reports have come, so talking about the new rate of GDP, CAD, deposit growth, profitability, forward valuation, where the Sensex is going. I think all we keep on hearing about the new India. Now, to my mind, I thought what would define the new India? And when I reflect, I feel there are 7 defining themes in the context of banking industry which would be relevant in the time to come and what they could be. So the demography, and if we put a fast forward to demography 2030, as per the data available, you can see median age of population 65. All these data are available. Now, what does it mean? These are, okay, some of the statistics. But to my mind, what will is more important, that to talking about only median age of 31, 32 years is not sufficient. Because the way technology has behaved in last few years, the way generation change has set in, the age bucket 20 to 30, 30 to 40, 40 to 50, 50 and above, all these customers or consumers would be behaving very differently. And industry has to prepare for them to give the differentiated offering. The second important defining factor to my mind would be urbanization. As of today, it is 31%. The urbanization in the country is expected to reach 41.8% by the year 2030. That means more demand for housing, consumption, education, all those related activities. Then digitization, the most talked about subject. And some of the data point that internet penetration, which is 30 crore or 300 million, may reach to 500. Mobile penetration is already 930 million or 93 crore roughly. Continuing the defining contours or the defining features, the next in the line would be industrialization. As we have been hearing about the thrust of the government on Make in India, we all know that contribution of manufacturing to GDP in the country has been stagnant around 15 to 16% for quite some time. Now, there is an intent and the action that it should enhance to 25% by the year 2025, which should result into creation of 90 million domestic jobs by 2025. The next is the education. So again, adult literacy, you can see presently 69%, and obviously there is a scope and there is every possibility of this increasing. Inclusion enough has been discussed. I think all of you are aware about the figures are getting updated on daily basis, and last count is 12 crore plus of the new accounts opened under the Jan Dhan Yojana. And finally, the global integration. And when I am talking about the global integration, I am not only talking about that question which has been discussed, debated many times, whether there will be full convertibility or not, but more from the, say, little bit of regulatory perspective. Convertibility, full convertibility is there or not, but there are few things which are happening, which are going to happen, and which would have a very significant bearing on the banking industry. For example, QE, quantitative easing. It happens or it is rolled back. It is going to impact the banking industry. To give you another sense, I think in last 10 days, there were two headlines which are very relevant. One headline was, it was being considered that Russia should be excluded from SWIFT network. It didn't happen, unlikely to happen, but a possibility. What could be the repercussions? There was another headline, and that is an event which has already happened. 3 large international banks, in view of the growing sensitivity around the KYC and AML, they have decided to terminate their corresponding banking arrangement with a large number of emerging market economies. A very large number of EMEs, they have terminated their correspondent banking arrangement. Now, if this trend has to become wider, how the banks in emerging market are going to deal with this situation? So that's the, so these were the 7 contours or the emerging trend which I talked about. Now, what would be their impact on? When we have discussed this, what is going to be their impact on? So I have used the word key acts and actors in the new banking landscape. Again, 7. 4 under the actors and 3 under the acts. So that is the customer, employees, owners, regulators, and then in processes you have the competition and consolidation, technology and risk management. 15 minutes are too inadequate to deal on. No, it's all right. I will respect your time, maybe a few minutes here and there. But if I talk in very, very, crisp sentences, customers, as I mentioned, the behavior, the expectation, the education, and the delivery channel, they would be very different. With the employees, there would be challenge. There would be 2 challenges. One, how to keep on reskilling them continuously. And second, how to retain them. Both would be challenges for the banks. Owners. Now, to my mind, owners, 2 things can happen. Number 1, particularly in the context of India, and as the things are being discussed or the intentions are being expressed, a large section of the bank, their ownership itself may undergo a change. That could be a possibility in next few years. And the expectation of owners on ROE, how it is to be met with. that would be another issue to be discussed. Regulators. Regulators, I think regulators are going to be, and is not specific to India, globally, regulators are going to be more intrusive, more demanding. And just to give you a sense, another headline, again, I think it was last month, I was reading a data point. It says from year 2009 to 2014, in Europe and USA, cumulatively banks have paid $230 billion in penalties and legal costs. And in next 2 years, they are expected to incur another 70 billion in the penalties and legal costs, 300 billion over a period of 7 to 8 years. This is the figure which has appeared. And I think I must add here, if you look in that context, you will feel that the regulators in India are very, very benign. They are very lenient people. We are not talking about the 300 billion kind of thing. Now, competition and consolidation would happen simultaneously. As you know, competition already now, few new players would be coming on the block, and consolidation may take place sometime. Technology, most discussed subject, and somehow I think whenever we gather into a seminar like this, we feel that technology is the panacea for all the ills. Whatever problems are there would be taken care of by the technology. And the risk management, it has to go beyond the compliance. Now, my point, I am trying to tell my eminent friends here that whether all these factors, the 7 contours and the 7 acts and actors, are there going to be any interplay between them? And how? How that interplay? Just to give one sense, now if there is a significant change in demographic composition, and it is also inducing urbanization to some extent, and urbanization is happening for other regions also. With a better education, this will define your customer of tomorrow. And then the delivery channel is available in the shape of digitization. I think it would be very important for the banking fraternity to kind of pick up many of these elements and try to do some scenario buildings, different scenarios. And I am sure a number of scenarios would emerge, and then the players can decide, choose their own niche or choose their own strategy. Just to give another interplay, regulator and owner, I mentioned 2 things. Now, regulator would expect you to bring more and more capital and reduce your leverage to the extent possible. And owner would expect that you should provide greater return on ROE, greater return or ROE. Now, these are 2 very conflicting aims which 2 actors are pursuing. How you are going to balance them? That is another point to be debated. Now, as I mentioned, that technology is the most talked about subject. And if I am talking about new India and new banking landscape, and if I don't talk about technology, it would be felt that I am not keeping with the time. So very reluctantly, I have put a slide on technology, though I was not inclined to do so. But nonetheless, I think there is a quote here from Brett King, which was in his book Bank 3. And this shows the multi-channels. I mean, we are talking about the ATM, mobile banking, online, call center, trading platform, and all those things. Now, what it is indicating? Is indicating that multi-channel offerings are there. Now, what to do with them? And I have mentioned that there should be single channel solution to multi-channel offering. Now, what does it mean? Now, today we look at, for each channel, there is a separate vendor. There is a separate platform. Rather, in some cases, for one channel, there would be more than one vendor. And to integrate all them, it becomes very complex. Not only complex, it has a continuing recurring cost. And at some point of time, whether cost benefit is working out or not is a big debate. So what is the solution? Ultimately, solution should be that it should be a single channel, a self-service channel kind of thing, or a virtual branch. And I am aware that some of the experiments are already done. They are, prototype is already out in the market. So it has to be a single self-serving channel which can support the multiple devices. I think that would be the only way of dealing with multiple channels in future to come. I just mentioned as a teaser advertisement, ATM versus Google. What I am trying to say. On a rough estimation, ATMs in India, globally ATMs handle 50 billion transactions per annum. And on these ATMs, whatever advertisements appear, they are all uniform. For every customer, there is a single kind of advertisement which appear. In contrast, Google handles roughly 30 billion searches annually. And with each search, the advertisement or prompt which is appearing, it is very much customized. It is for the individual. Just before coming here, I had a look at the FT of today, Financial Times, and there was a small item that in China, I think there is a very popular chat application, WeChat or something like that. And they ran an advertisement for BMW. And it was only appearing on the devices of a very few selected numbers. And there was an uproar in the country because a large number, I think this application has something like 440 million subscribers. So the large number of subscribers who were excluded, there was an uproar that we are not considered good enough even to look at the advertisement of BMW, forget about buying it. So this is the kind of things which are happening. Now this is all as a built-up of what I am trying to say. But what I am trying to say here, that while this is all fine, the growth projections, the technology, great opportunities and technologies available as enabler, but whether banking is beyond technology also, or there are some fundamental questions which banking community would be required to address before they can move ahead to exploit these opportunities. And that is why the title of this slide is Few Questions Which Are Seeking Answers. I am just posing those questions. Number one, account number portability. If today mobile numbers are more than the banking accounts, and in mobile number portability is possible, why tomorrow question will not come, why a banking account number portability should not be possible? And just imagine, if banking account number portability becomes a reality, it would be a major disruption in the industry. And every bank has to be quite watchful and cautious about this event to be happening, how they are going to deal with it. Retail loan. For last few years, we are talking about retail loan. I think this is the only salvation for the banking industry. Fine, good, in the given time. But can the retail loan be a one-way traffic? That over a period of time, you just keep on underwriting the retail loan without any mechanism in the market to offload it, take it out of your balance sheet, and then the related ALM issues. Crowdfunding. Now, it appears to be a very small thing today, because if I remember 2011, the crowdfunding volume was 1.3 billion globally. In 2013, it has become something like 5.6 billion. Compared to the global banking and financial world, they look very small figures. But these are the kind of activities which tend to increase with geometrical proposition, where it can go. And today again, I think, pick up the FT and you will find something on P2P. This is P2P lending. This is gaining so much ground. I think there was a headline that Goldman Sachs and Society General, SocGen, they have decided to enter into this field. So these are the pointers to the future which is coming. cashless or less cash, whatever we talk about in the society. But if that were to happen, what will be the future of ATMs? Whether the investment which is done or being done, would it remain relevant? How you earn the return on that? The next question, would mobile banking succeed? Number one, whether it will succeed or not, because there are questions of the type of handset, operating platform, interoperability, ease of downloading, the time lag between the activation, so many issues are there. But if it were to succeed, whether the plastic would be still needed? What about the investment and efforts put into the promotion of plastic? Next, IFRS. Now, of course, IFRS is the separate issues around it, whether it can overvalue the assets or it can overstate the capital, whether with the IFRS we are moving away with our old, the conservative norms of adequate provisioning, booking the profit when it is realized, all those issues are there. But since our seminar is not on IFRS, the simple point I am trying to mention that as we move ahead and adopt the IFRS, whether it will be with or without the prudential norms in addition to that. So, and if that were to happen, what would be the impact on financial statements? Continuing with few more questions, large corporate. Would they continue to borrow from the banking system, or ultimately market would develop and a large segment of them would move away to market? The point I am trying to say that if large corporates move to the market, if retail, you have to rethink your strategy. If there is a crowdfunding, if there is P2P lending, then what will be the role of banks? What they would be expected to do? So probably banks will have to reinvent them, that how they will maintain their relevance in the world of finance. That is the point I am trying to make. Here I will not even read it, but I will just leave it this point. The loan restructure. And new regulatory phrases, of course, I mean to say banking community is quite already familiar: leverage ratio, capital conservation buffer, counter-cyclical buffer, SIBs. Here it will be domestically important banks, living will, resolution, total loss absorption capacity, and so on. So many things are already there, are going to come. Industry has to prepare for it. Now, after doing all this, you will also require to do the banking and business. I am reminded of the Tata old days, Tata advertisement that still we hum banate hain. So this all is to be done, and then banking is to be done. It has to generate adequate profit so that ROE is decent enough for the investors to put in the capital. And that is why I am ending my 15-minute opening address, setting the context with a question that if all these were to happen, capital, where would you find it and how would you find it? I think let me leave with that question mark. Debate can commence now. Thank you very much.
Thank you, Mr. Mundra. Thank you, Mr. Mundra. Thank you, Mr. Mundra. Can I please request you to stay on stage, sir? I'd like to call upon Mr. R. Sukumar once again, just for a felicitation of Mr. Mundra.
Thank you very much.